Hello and welcome to Pro Trader Strategies Market Commentary for Monday, November the 13th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. As per usual, Monday's very quiet day in the form of economic data. Not really a whole lot to talk about here and or across the pond. It is a Canadian holiday, not that they are a real volume add to the overall markets, but at the end of the day, it is still a quiet day being a Monday, and even more so because there's no economic data. All right, on to the overall markets. We've got crude oil moving slightly higher today by about 12 cents. Looks like the chart's down on the day, but that's just where we opened up overnight. Then gold futures moving a little bit higher today as there's a bit of a flight to quality. Overall equities were down in negative territory earlier on today. We're starting to see a bit of a rebound, so it's going to add a little bit of negative pressure to gold futures and pushing up against this 61 fib level. That's going to act as resistance, although it has been not as strong of a support resistance area, but more a migration to that level because that's where the point of control was. And then we have the bonds up slightly by about 8 ticks, as you can see, well off of the highs of the day, which were happening when we were seeing the overall equities in negative territory, and the VIX coming off as well as those equities are rebounding. The VIX was really spiking this morning when we saw some bearishness in the overall market. And you can see the Dow Jones opened up, maybe went slightly lower right off the bat, but now has since trudged and clawed its way back into positive territory, up almost 17 points on the day there. And we have the NASDAQ in positive territory as well, albeit only by about 5 ticks, but you can see they were well into negative territory earlier on today and have since started clawing their way back to the very close to the highs. Same situation here with the E-mini S&Ps. As you can see, we opened up overnight, slammed down to the lows right off the open. We started to start seeing a bit of a rebound, and that'll show up a little bit better here on this 30-minute chart of the E-mini S&Ps. As you can see, overnight we did have some highs printed. Came down to the lows of the day. Intraday, we got down basically right here was about the open, and that's when the market started rallying just at the end of the overnight session, as overnight inventory was really short. Day session came out and blasted those shorts out up to the upside, and as you can see, we are very close to the highs of the day for the most part in the E-mini S&Ps. Feels very much like an inside day from Friday, but you can see it's just slightly outside of that. But most of that trade pushing that value area high is created because of the overnight inventory. If we were to set that up and maybe even take that out, I'm sure it would be more of an inside day from Friday, and that's really what it feels like right now. As speaking of Fridays, Friday, the webinar on Friday was on the put Christmas tree, and we did this, went through all the rules with Intel, and this fit the rules for setting up the put Christmas tree, or it's a 1x3x2 butterfly, and it fit so well that I decided to put this in my portfolio. This was a request from one of the people in that webinar. Said, hey, let's check out Intel, see if it works out. Very well could want to come down, test this low here, and maybe even cover this gap. I'm looking for it just to come down and test these 43 areas. So in both my margin and in my IRA, I added this put Christmas tree, and I did it with the December. I bought one of the 46 puts for every 3 of the 44 puts I sold, and then defined that risk by buying the 43 puts twice. So that creates that Christmas tree. The base, we skip one strike, we skip that 55 strike, and our credit was, the debit paid for that strategy was 40 cents in both my IRA and in my margin, which is right in line with my rules of collecting about a quarter the width of that skip strike. So $2, a quarter of the width of that would be about 50 cents. So I got that about a dime better than what my rules call for. So looking for that to come down, test that 43, 44 area. And if it comes down to that 44 area, that's where I can make my max profit, which is what I'm looking for. So a little bit of a pullback in Intel is what I'm looking for. It's really just overdone to the upside. I think we're still going to see some profit taking going on. As you can see in this last few months, it has really had a massive blast off. Yes, they did come out and beat earnings, but it doesn't mean that people aren't going to want to trade and get out of some of those longs that they've been holding on for quite some time. It's just a pretty difficult task to hold on to those when you see that kind of move for a lot of people. So I think that we might see a bit more of a pullback here. And that's about all I got. We're going to be starting a new series here where we're going to be starting out a little bit more beginner to intermediate and go into more advanced strategies, kind of walk it right through. We've been getting into some more advanced strategies, and we have a lot of new people out there, so thank you for joining us. I'm going to be starting at the basics, really drill down on those basics so you guys have a really solid understanding of options, and then we'll build upon that as we go on in the next several months. So go to Pro Trader Strategies, make sure you sign up for that, because even if you're an advanced options trader, I'm sure you'll be able to have some takeaways coming away from some of these webinars, which is what I try and do, mix it up a little bit to add in some more profound information for some of you guys that are more advanced, and still give people that are beginning and have no idea what options are a good solid understanding. So check that out at protraderstrategies.com. That's all I got for you guys today. If you can't take that, take it easy.